Do you avoid the financial side of the business? Are you overwhelmed when you look at your financial reports? What if I told you that you only need to review 5 numbers a month? If you've ever opened your financials and thought, none of this makes sense, you're not alone. Most winery owners aren't bad at business. They've just been handed reports that don't actually help them run the winery. Think of your financials like the scoreboard at a game. You don't need every stat, just the ones that tell you if you're winning or losing. Hi, I'm Jeanette Tan with QB Winery Solutions. We work exclusively with small family wineries making 15,000 cases or less a year. I'm going to show you the 5 numbers every winery owner should watch monthly. Now, your financials are the scorecard for your business. And before we even talk about those 5 numbers, one thing matters more than anything else. You need a sales forecast and expense budget. Together, they're your game plan. Of course, you created a game plan that will give you a reasonable profit at the end of the year. But without the budget, you're just looking at random numbers with no context. Now let's talk about the 5 numbers that actually matter each month. The first number you should monitor is wine sales by channel. Did you know that you can massively impact your profits by shifting your sales mix between different channels? Would you like to make more money without making more wine? Now you know that not all wine sales are created equal. A case sold through your tasting room, wine club, or website is very different from that same case sold through distribution. A $360 tasting room case sale might net you $250 after costs, while a $180 wholesale might barely break even. Same wine, same costs, very different outcome. That's why looking only at total sales or top-line revenue can be misleading. You need to see sales by channel and compare them to your budget so you know which parts of your business are actually supporting you and which ones are quietly draining cash. Now, in this report, along the left, we have our sales channels, and this is the wine revenue for the month. Now, this is my sample file, which has information in 2018. This is my budget for October. This is my variance. And then this is my year-to-date numbers, my year-to-date budget, the variance, and this is my annual budget so that you know where you're headed. Some of these channels sell seasonally. Now, ready to see how many cases you're actually moving and why that matters? But before I go any further, I do want to mention if you're tracking numbers that don't actually help you make decisions, the problem usually isn't you. If you've asked yourself, are these numbers real? There's a quick check you can run, and I walk through it in a short free mini course linked below in the description. Now let's get back to these 5 numbers. Are you keeping an eye on how many cases are actually moving? What surprises could you uncover? For some reason, I find the number of cases sold is one of the most overlooked numbers, and it's one of the most dangerous to ignore because this number connects sales to production. If you're producing more wine than you're selling, inventory builds up, cash gets tied up, and pressure starts to build fast. I see wineries with cellars full of wine and checking accounts running on fumes. That's a cases sold problem. When this number is out of balance, cash flow usually feels tight long before profit and loss shows trouble. Next, let's break down why the next number, gross profit, is the most crucial number you should monitor. But before I do that, I want to show you a profit and loss report. All of the remaining reports are based off of the profit and loss report, but I'm just showing you snippets. This is a collapsed report where I've collapsed all of the functional accounts. You can actually get this P&L on one page, and most winery owners love this report. When you want to see the detail, you can expand the rows and see all the detail through all of the accounts. Here is the gross profit by channel report, where the channels are across the top, and then you can see the wine sales and the wine COGS along the left. Did you know that high sales don't mean high profits? Is your top line revenue really telling you the whole story? Now, gross profit is your sales minus your cost of goods sold, which is your wine costs. It tells you how much money is actually left to run the business. Gross profit is like the wine left in the barrel after you bleed off juice and after you finish fermentation. If your yield is too low, you'll have nothing left to bottle. Same with gross profit. If your margins are too low, you'll have nothing left to cover overhead, loan payments, or pay out some profit. This number shows you why top-line revenue isn't the whole story. If you discounted a bunch of wine or sold more through distribution, your revenue will be up and your case sales numbers will be up, but your gross profit will tank. You can sell a lot of wine and still be in trouble if margins are shrinking. Discounts, rising costs, and channel mix all show up here. Now, what if I told you that most overhead costs are predictable, but are your expenses under control? Overhead isn't mysterious. It's everything that keeps the business running. It's all the costs to keep the lights on before you sell a single bottle, payroll, insurance, software, professional fees. These don't usually surprise us. The problem is when they slowly creep up and no one notices. Comparing total overhead to your budget every month helps you catch those changes clearly before they turn into cash flow stress. Now, if you've been asking yourself, I've been looking at my numbers, but I still don't trust them, that's often a setup issue because your chart of accounts was probably not built for a small winery. I've got a simple way to check, and I walk through it and the fix in a free mini course shown in the description. But let's keep going. The last number to look at are the winemaking costs that might also be sneaking up on you. Now, how can winemaking affect your financial health? Are these costs hidden in your reports? Are you overproducing and draining your cash flow? Winemaking costs are as important to monitor as your overhead costs, but they are somewhat hidden because they don't immediately impact your profit and loss. They also could be hidden if your file is not set up effectively. The winemaking costs can quickly drain your cash because they are large expenses like bottling costs and grape payments that tend to show up when you're least prepared. They're like harvest. You know it's coming, but without a plan, it can overwhelm you fast. If your chart of accounts doesn't clearly separate winemaking costs from everything else, you can blow the budget and not realize it until cash flow is already damaged. Now, with all this insight, you'll be prepared to track your numbers smartly. So let's recap. Every month, you should be watching these reports against budget. Wine sales by channel, number of cases sold, gross profit, overhead, and winemaking expenses. And here's the common thread. Every one of these numbers only works if your chart of accounts is built correctly. Now that you know what to track, the next step is making sure your financials are set up to actually show you this clearly. Click the link in the description and I'll show you how to fix your chart of accounts so that these numbers finally make sense. Thanks for watching. Cheers.